to the HX webinar series, Trends with Benefits, Become a Top Trending Company on HX. My name is Scott Jordan. I am the founder of Healthios Exchange. Healthios Exchange is the premier investment marketplace dedicated exclusively to the global healthcare industry, employing crowdfunding as the cornerstone of a new funding paradigm. Healthios Exchange offers direct access to the broadest opportunities on a fee-free, carry-free basis in the most trusted online environment. Since August 2nd of this year, over 1,300 members have joined Healthios Exchange, including emerging growth company executives, accredited investors, investment professionals, and strategic buyers. So the topic today is getting the attention of investors and strategic buyers. That's really the key here, and that's what trending means. So the agenda today, there's 6 things we'll be talking about, or 5. Next generation capital raising, talk about crowdfunding, access accredited investors via crowdfunding, what is HX trending, best practices for emerging growth companies who are trying to get attention for capital from investors or partnerships from strategic buyers, what is Healthios Exchange, just real quick, and how does it apply to trending, and then of course some contact information. Let's take a look at next generation capital raising via crowdfunding. So essentially what we have is crowdfunding is one of the world's fastest growing industries. You'll see that campaigns across the globe raised nearly $2.7 billion last year, and you'll see the distribution, not surprising, the majority of it came from North America and Europe. But across all regions, crowdfunding expanded at a 63% compounded annual growth rate, and equity crowdfunding has the fastest growth rate. Keep in mind, though, it was coming from a smaller base than lending-based platforms, which basically are peer-to-peer lending like Prosper and Lending Club. Reward-based are like Kickstarter and Indiegogo. So this is equity crowdfunding from accredited investors. So next generation capital raising, crowdfunding, key factors facilitating the growth rate in crowdfunding. Well, one is really the JOBS Act, which I'll talk about real quick, but regulatory framework. It leverages the transparency, speed, and scale that advances in technology and internet can deliver. So a lot has to do with changes due to legislation and strong social media and market penetration in the internet necessary to harness the demographic technology trends, to develop collaboration and cultural shifts. So these two are very, very important. And you'll see the matchmaking, and it's funny to say this, but Match.com, for example, tagging data. Google does the same thing. So giving the ability to get people onto your site to tag their data to make information and data flows more efficient. We take a look at the JOBS Act here. Here are 6 different provisions, but let's go through some of the main ones. The lifting of the general solicitation ban, which is the second one down, that just came off about a month and a half ago. There's 506C now, which entails a whole bunch of stuff, but at least it was a step in the right direction, meaning I don't have to have a relationship with you to do a deal or to solicit you on an investment. So the way that the 506C works now is you have to submit your intentions to solicit 15 days prior. You have to submit your marketing materials, etc. And you have to have assurances that the people are looking at are accredited. So we're doing, it's 506C, by the way. We're just focused right now on 506B, which is the traditional private placement regulations. In the future, I think the platform will go to 506C. And if you want to see some 506C deals, go to AngelList on their main page at the bottom, and you'll see a whole bunch of companies that have actually done all the paperwork to generally solicit. Raising the shareholder cap's a big deal from 500 to 2,000. That's important because if you're, the essence of crowdfunding is a small amount of money from a large group of people. If that's going to be the case, then obviously you're going to have a larger shareholder cap. But then you're going to want to put those investors into special purpose vehicles that essentially don't fragment the cap structure, because no venture capitalist, if that's going to be the next round of funding, by the way, I'm not saying that is, but if it is, they're not going to want 500 people on that cap table. Increased limits on Reg A, so this is a public offering from $5 million to $50 million. We may tap into that in the future. Legalizes crowdfunding. That's Title III. That's not accredited investors, and that's not applicable to this platform. This is just accredited investors. Okay, so that's just kind of a quick rundown of the legislation and the impact on crowdfunding, the positive impact it's having on crowdfunding. This slide, is interesting. I included this because there's really, what are the forces impacting what they call direct investing, meaning you're not going through a fund per se, you're investing directly into a company, and that's crowdfunding. Historically, it's been dominated by angel groups in early stage incubators and accelerators, but now with technology, anybody in the continental United States, between Boston and San Francisco, and I say those two cities because that's predominantly where most of the deals are, but if you're an investor in those other cities and can't participate in an angel group, there's opportunity. So Jobs Act, we just went over, Titles 2 and 4, general solicitation and the shareholder cap. Social media, obviously you don't really need to talk much about that. The advances with LinkedIn, Twitter, they're all over the place. There's all kinds of them, but, there's some, LinkedIn's a huge, example of power of a network. Metadata, tagging data, maximizing data efficiency. So somebody's on the portal and they put oncology in their profile, and you'd never meet that individual, but they are interested in oncology investments. We can put you two together, so you don't have to fly around, stay in hotels, etc. And then lastly, the crowdfunding, lowering the investment thresholds. In the healthcare industry, what's interesting is because it's much riskier than other segments like technology and whatnot. It's very capital intensive. It's typically binomial, whether it's medical device or biotech, less so with HIT and healthcare services and diagnostics. But there's a lot of risk there, and people like to spread their dollars around just like venture capitalists do. Okay? Those are the four major. When we take a look at the crowdfunding targets, look at the size of some of these markets. Reg D is $1 trillion industry. Angel investing, $22.5 billion invested in 2012. Venture capital, $30 billion. And then I highlighted friends and family. The reasoning is that was what crowdfunding can take a slice from each one of these and be really, think iTunes. I mean, it can really change the nature of this market. The friends and family invest $60 billion a year. Many of those are accredited investors, but it's ad hoc. There's no structure around it. So that's what crowdfunding can, put some organization around that. So let's talk about accessing accredited investors via crowdfunding. First of all, investors like healthcare, but they're limited to funds. So 8 million accredited investors in this country, 41% of them have investments in VC funds, and only 5% have direct investments in equity offerings. And by the way, of those 5%, the majority of them are oil and gas and public entry REITs. So healthcare does rank as a top priority of most investors, obviously because it has two different facets to it. Number one is people can make money. Number two, we've all been impacted pretty much by diseases in our own families that take loved ones. But you'll see that biotech, healthcare services, and medical devices and equipment always rank extremely high when they talk to angel investors. But why the low participation? I mean, this is a key issue. Why such a low participation? Well, there's challenges associated with investing via angel groups, right? So if you don't live in San Francisco or Boston, maybe you don't even get access to the angel group. Investment thresholds are very high for the level of risk. So the odds of a biotech medical device approval are low. So people want to diversify. Pretty hard to diversify when the typical investment is 25 grand, which is typical of angel groups or more. Annual dues are problematic. Some people just don't want to pay the annual dues, which is kind of funny because they're usually not that high, but you'd be surprised. It's almost like a condo assessment type thing. Angel groups require participation. So some people just don't want to participate in groups for whatever reason. Challenges with raising small amounts of capital per investor. Companies are not interested in accepting investments usually under 25K unless they're seed. Fragmented capital structure is problematic to follow on capital sources. None of the venture capitalists want to see fragmented capital structures with a bunch of lawyers. So let's go into what is HX trending. When we take a look at HX trending, what the very definition of trending means movement, right? Good or bad. So our strategic buyers, our investment professionals, whether they be accredited investors, family offices, venture capitalists, foundations, they want to see movement. They want to see companies getting stronger or weaker, and where should I put my money? So from a capital sources and strategic buyers, our trending, and I'll go into that more detail, but they use it to benchmark companies, so strategics and venture capitalists, and reviewing companies for investment. So they want to see the hottest companies, just like the trending button on Twitter. It's no different. the way we measure trending is page views, so the crowd keeps looking at a certain deal. And that crowd, by the way, those 1,300 people, a lot of them are the right people in the industry. So there is a correlation between page views and quality of the company or promise of the company. People like pages. That's similar to Facebook. And then Q&A with management, so those that take it to another level. In the future, first quarter, we'll have HX scoring, where we're going to score companies based on variables that are correlated to success, and the score changes monthly based on Catalyst. And you also can sign up to be a follower of a company page and receive scoring changes, either up or down based on Catalyst, which is very, very attractive. It's not static data that people are really interested in, like Thomson Reuters. What are the phase 1 companies in glioblastoma? It's essentially the companies that change. So some molecular target that gets hot, and you can tag that. So, there was this many mentions of it last month, and it went up 10 times. You might want to take a look at that target, because obviously it's getting some press. So that's what HX trending stands for. The benefits for emerging growth companies when it comes to trending is that we distribute monthly a list of trending companies to a lot of strategic buyers, 1,700 of them, and a ton of capital sources. So our distribution and your exposure via this could be tremendous, because all companies are trying to get to the top of the pile. So listing a company that all of a sudden gets more page views or gets more likes or their scoring goes up or down, those lists of trending companies is key. Highly scored companies profiled on most viewed tab. So there's prominent placement in the HX directory for page views. So what's interesting about this most viewed tab is that, if you're highly scored, more people will look at you. And so that's a nice way to highlight your company. And of course, some organizations or VCs and investors invest via market sector. So if you're in a market sector, one of our 46 market sectors, essentially, you can, if you have a higher score, you go up higher on that market sector page. Participation in HX roadshows. So we have one-on-one roadshows, these one-on-one meetings and roadshows. And if you're a highly scored company or trending, you could go out on the road and host HX webinars, which is like what I'm doing, but this is not for existing. This would be for existing and new investors that come into the portal. So those are the advantages of being highly, I guess, visible in this trending paradigm. So best practices. How do you become, a highly trending company? Essentially, what you do is step number 1 is the HX company directory. You want to list your company in the directory. You want to pick an investment stage. You want to pick a market stage. Investment stage is either funding now, coming soon, or funding complete. And since we haven't been funding companies up till, it's probably going to change next week. But the bottom line is that you're probably going to be coming soon. Market stage, select your market sector based on your lead program. So, if you're, for example, you want to be in the right market sector, and then also you want to say, are you venture-backed or are you non-venture-backed, because that's the way a lot of people make decisions. Become an administrator of your page. So when you become an administrator, you receive activity reports, visitors, page views, and the map, etc. You review the page visitors reports and follow up. So we have a premium service. This premium service, I think, is going to be priced out like LinkedIn InMail. I don't know, like $50 to $100 a month. But we tell you who comes to your page, which is key, because if you keep, let's just make something up, John Doerr, Kleiner, he keeps coming to your page. I mean, that could be valuable information. Curate page, non-confidential documents, photos, videos, events, company highlights, deal terms. Q&A forums, stimulate conversations, respond to inquiries. I mean, if you're not responding to their questions, I mean, obviously it takes away a lot of the value. Invite colleagues to join HX and follow your page, so you'd want to have all your team members on the page as well. You can see it's anywhere from board of directors to your management, to your employees, investors. So step number 2, more page views equals more visibility equals more dollars, right? So people are going to fund the hottest companies like usual. So you want to continually curate your page to foster engagement, because those followers that are on your page will get notifications. You want to encourage your followers to invite colleagues to your page. So you want to leverage our invite system through LinkedIn. That's an easy way. And we also can give you a reference code so we can track the people that come in. And then companies with high page view activity are above the fold in page views. And so if you have higher page views, or you have higher scoring, it's more prominent above the fold, which just means, you know, what you can see when you take a look at the web page. Profile the monthly newsletters, highlighted in features tab, participate in HX events. So there's a lot of ways here to get the attention of these key investors, whether they, like I said, are accredited, venture capitalists, family offices, foundations, corporate ventures, strategic buyers. So real quickly, what is Healthios Exchange? You know, essentially it's a marketplace, right? It's a crowdfunding marketplace, and it's an end-to-end solution. It's not, we don't think crowdfunding alone can get you to the finish line. So once again, it includes all these different areas, whether it be conferences, we have offline meets online, we have management presentations, we have LinkedIn groups, we have scoring system, capital flows, a lot of research, benchmarking, etc. So this value void that you hear, and this value void's a lot less than it was a year ago given all the activity in the IPO market, but there still are some, you know, probably should take out that star above IPO because that's changed, but essentially there's still gaps in the funding continuum, you know, from discovery all the way to approval, and it's typically early stage, and it's typically with venture capitalists, right? There's only a handful that have funds, so there's still money being applied, but it's typically in big syndications. So the Healthios Exchange, you look at the bottom there, if you want to make sense of this whole thing, the crowd finance, you know, it starts, that's their non-venture backed companies, and you go with Foundation Place, which is venture philanthropy, since grants are getting squeezed, Express, which is venture-backed companies. And by the way, when I say this, non-venture, venture-backed, that just defines the company that's the company that's trying to crowdfund dollars in markets, at the market transactions, pipes. And LiquidNet is a liquidity is in development, but it won't be ready for a while. But it's a secondary trading, so people can trade out private shares. And then lastly here, responses to best practice investing. You see these same portals: CrowdFinance, Express, in-market, fee-free, carry-free, and the conclusions of the Kaufman study, which is a study that looked at. They had 99 DC investments, and they only had 12. I think 12 of those 99 they actually returned it two times. So majority of their funds just returned capital after fees. And so the key thing is then the bottom there is crowdfunding lowers these cost structures, and it's important. So direct investing is becoming very, very popular, both on the reward side, the equity side, and the peer-to-peer side, lending, which is, you know, synonymous with don't go through a bank. I can loan you money directly. So direct investing is very, very hot. So those are your 4 portals. Here are your results and your benefits. CrowdFinance, no adverse selection. Everyone's welcome in the portal. There's no orphans, meaning we go seed to exit. I think the average pharmaceutical company raises nearly $50 million over a 5.7-year period, and so the largest crowdfunding deal that I know of is $3 million. So it's not going to get you to the finish line. What it will do is hopefully get you to a value inflection point so you can attract additional capital. I do think crowdfunding down the road will provide large amounts of money. It's just we're in the early years here, or early stages. Express is fee-free, carry-free, meaning we don't get a retainer and we don't take carry on the investments. And then in-market is the publicly traded portal, the liquidity portal, and of course fee-free, carry-free down at the bottom. So this is really the benchmark. You know, the key thing with contact me if you guys have any questions on trending. You know, how do you get more prominence in the portal? How do you get more page views? How do you get a higher score? How do you get placed on the, you know, tab in the company directory, right? Most page views, etc. How do you get more followers so they can be notified? These are all key areas, and it's really important. This is probably one of the finest investment relations tools, aside from crowdfunding, that I've seen in the industry. But if you have any questions, please give me a call or email. Also, you can go through the portal and do this as well, and I'd be happy to take some time with you to make sure that your company is following best practices, so you have the highest probability of raising capital on a crowdfunding platform. The last thing I'll say is, you know, we are focused just on healthcare. AngelList is doing a fine job, and I would highly recommend taking a look at their site as well. But they do everything. This is healthcare professionals, and we have a lot of venture capitalists, strategic buyers, family offices dedicated to healthcare in this portal. So thanks again for your time and effort, or your time on this call, and I look forward. We are having another conference here coming up. This next webinar, by the way, coming up is probably one of the biggest ones we've had, and that's the syndicate model, which is how can companies leverage syndicates, which includes a lead investor, somebody crazy who's crazy about your technology, and they have members that invest alongside of them. Once again, AngelList, if you want to see syndicates in action, I would go to angel.co and check out their syndicate model because we're building out something similar. It is phenomenal. So thanks again, and I'll talk to you soon.